Avani Bhatt, Senior Vice President at JM Financial. Now, Avani, thank you for joining us here on First Take. A very good morning to you. Now, Nifty has scaled 22,000 for the very first time. This is the third fastest 1,000 point rally. Now, the question really is, how much farther can we go?
Good morning, Suyash. Good morning, Amit, and a very good morning to all the viewers as well. So Nifty, if you look at after a 12-day hibernation period, Nifty broke out of its resistance zone of 21,800 on Friday, and it also closed above it. And if we look at the changes in the open interest data for at different strikes in Nifty, the highest open interest moved up to 22,300 and 22,500 on the upside. And on the put side, the highest open interest, we saw a lot of build-up happening at 21,700 and 21,800 strikes in puts. So clearly, the support base has moved up from 21,500 to 21,700. And on the upside, the rooms have opened up for levels up to 22,300 and probably 22,500 also in January series itself. Now, so today clearly 22,000 mark is a very crucial level because that was the most washed out for level and also a psychological round figure mark. So we may see some profit booking around 22,000. But it's a bullish trend. So any dip close to 21,800 should be used as a buying opportunity. Upsides, we can target around 22,300 level in a very, very short time. So, and the overall, now the trailing stop loss should be kept at 21,700 on the downside. So the view is positive until and unless we don't see any overnight negative surprises. I don't think the market is in a mood to give away its gains.
All right, the view remains positive on Nifty. Also want to get your view on the banking pack. Now, we have seen good movement in Nifty Bank over the last couple of days. And in fact, we have broken above 48,000 levels this morning. But is this move above 48,000 convincing to you? Because at the end of the day, the markets overall are moving higher and the banking pack has pretty much underperformed in this 2-3 day rally as well.
I think, Suyash, this is like the fourth consecutive week when we are discussing that Bank Nifty has been a laggard, and it's even in this entire up move, it is acting as a laggard. So 48,000 call for the weekly expiry has the highest open interest. It is trading above 48,000, but let's see if it sustains above this level and closes above this level. Now, there are multiple resistances on the upside also for Bank Nifty. If at all it manages to close above 48,000, then the next crucial resistance is around 48,400. And only if it crosses 48,400, then we are heading towards 49,000. Otherwise, there's a very high probability that it may settle down in the range of 47,600 on the downside and 48,200 to 300 on the upside. So Bank Nifty is yet to show major recovery signs. Still, the resistance is at 48,000 only. Since the opening tick, we haven't seen any major open interest shedding also at 48,000 call. So we may probably during the day see a down move below 48,000. So let's hope for the best.
HCL Tech seems to be the best performer in the IT pack as far as Q3 results are concerned. Net profits up QOQ 13.5%, revenue up 6.7%. The stock has been rallying almost 46% the last 1 year as far as earnings are concerned. It's up almost 3.5% today. Time to cash out or buy more?
So ideally, if it's a trading position, I think one should cash out, book out profits in HCL Tech because again, going by the open interest data, the highest open interest is at 1,600 call, which is pretty strong. And HCL Tech opened around those levels. So trading positions can be booked out. For investment positions, one can hold on with a trailing stop loss of 1540 on the downside. We may see, but that may take some time. We may see higher levels of around 1,650 to 1,700, but that may take a lot of time. And you will get a opportunity to buy again on dips. So this is a good level to book out profits.
All right, and what's your view on Wipro? Now, that is the best performing in the IT pack. The stock, in fact, hit an upper circuit and it moved higher from there. Currently, it's up somewhere around 8% or so. Now, as far as the numbers go, they were slightly better than expected, but overall, still muted. Like, what do you think is driving this rally? And second, can this momentum continue?
So in case of IT sector overall, it's like no negative news is a positive news. It was a very beaten down sector. Since last 2-3 quarters, the sector had done nothing at all. But there was a lot of accumulation that was happening at the lower end. And now this no negative news is acting as a positive news, and there's a catch-up rally that the entire sector is doing. Now, Wipro also posted higher net profit, and rupee revenue also was positive, better than expected. And it has given a very good move. The highest open interest for Wipro calls was at 500 level, and the stock opened above that level. So if it sustains above 500, probably the rally will continue up to around 560. So I think in this case, rather wait than booking out profits, but you should trail your stop losses to 470, which was Friday's closing. So if at all it goes below Friday's closing, then we may see further downside. But otherwise, you can keep this as a trailing stop loss and ride the entire rally.
Okay, Avni, for Wipro and so much for Wipro and HCL, what do you recommend for the investors today?
Okay, so as far as now IT sector has already rallied, so we are not considering anything in this sector. One stock that I like quite a bit is IOC, and I've been mentioning this since last couple of weeks. So IOC around 133 is a good buy level. There's a lot of long build-up happening in the stock in futures as well as the options segment. The stock can move up to around 145, and one can keep a stop loss of 127 for the buying position. The stock has opened with a gap up today, and it's trading somewhere around 135 to 136. But any dip close to 133 should be used as a buying opportunity so that your risk reward remains good. The second stock that I recommend is Chola Finance. Chola Finance, again, we are seeing a very good build up in futures. A lot of open interest has been added in futures on the long side. And also the options activities showing a positive movement possibility. So we recommend buying Chola Finance in the range of 1235, 1235 to 1240, and targeting around 1305, keeping a stop loss of 1205. The third stock, again, now most of these stocks have opened with a gap up today, and they are slightly higher, but you can wait for the dips to accumulate these stocks. The third stock is PNB from the PSU banking space, and we can buy that somewhere around 98, and target will be around 104. This is a very short-term trading call, targeting 104 on the upside and keeping a stop loss of 94. From the FMCG sector, a slightly defensive sector, given that Nifty is trading at all-time highs. So ITC is a good buy at this current price of around 465. Target would be 480, and you can keep a stop loss of 457.
That's the view from Avani. Thank you, Avani, for joining us here on News 9.